And Nikos, as we watch the returns here, you had written going into the election that you expected once we would get past it, that stocks would indeed resume their upside. Given the events of the last 12 hours or so, 24 hours, are you still of that view? And what were you hearing from clients overnight as all of this was going on?
Yeah, indeed. We had some de-risking in the previous 2 weeks ahead of the US election. Maybe that de-risking was a bit of an overreaction. We saw similar de-risking 4 years ago ahead of the 2016 election. And it doesn't matter who is going to be the president. The market will go up anyway. I think the issue here of the fiscal stimulus matters so much, matters more like in terms of the composition of the equity bull market rather than the size of the equity upside. In my opinion, the market would go up anyway. Whether the bull market will be broad or narrow from here would depend on the fiscal stimulus. And what it looks like is that we are going to get a split Congress, which means perhaps delayed or smaller fiscal stimulus down the road, which means that the bull market from here is more likely to be narrow, as it has been over the past 7-8 months, and more like driven by growth-oriented rather than value-oriented stocks. And again, the fact that the steepening trade in the US Treasury curve that has been a consensus trade in the previous weeks is being unwound today. It doesn't bode well, obviously, for the value trade. It favors growth-oriented sectors such as tech and growth-oriented indices such as the S&P 500 index versus non-US equity indices that tend to be more value-oriented.
And then, Nikos, I guess just thinking about some of those flows dynamics and the value trade unwinding and all these sorts of drivers that were such a big part of how the market began its rally. That was such a flows and momentum sort of beginning to if we go back to the spring. How do you see that playing out as we get past this risk event where we've had the election, we know where things are going? I mean, how do you expect money to kind of allocate itself through the end of the year and into 2021?
Yeah. The bull market since March has been driven mostly by liquidity and debt creation. And what I mean by that is that the stock of cash and the stock of debt have been rising so steeply since March due to the virus crisis that the equity market has to catch up. The equity universe has to grow to catch up with this massive expansion in the stock of cash and the stock of debt. And if you think now about the US election, if anything, this trend of liquidity creation is likely to accelerate. The reason is that in the absence of any big fiscal stimulus here as a result of the split Congress, monetary policy will have to play a bigger role going forward, which means perhaps even more QE by the Federal Reserve and other central banks, which means even more liquidity creation, which means even more expansion of the stock of money supply. As a result, the equity market and the equity universe will have to do even more catching up with that liquidity expansion going forward.